Alrighty, hello everyone, and I've got some big news today, documentation-wise. Um, it is a Monday, November 10th, 2025, and I'm just going to be going over the chart, talking about what happened today, everything that I saw, and kind of got some big news and stuff that I'd like to speak on, and it should sort of, I don't even know exactly what I'm trying to say, but there we go. Today should, I don't know. I can just keep it like this, it'll be fine. But I've got some big news today, and the goal's going to kind of be a little bit different with these reviews, and I'll be discussing a lot of my thoughts whenever I'm watching it because they're a lot, whenever I'm watching live price action because they're a lot more prevalent in my mind now. And I want to document these for not only, anybody that chooses to watch this and study and, learn this skill, but also for myself because I'm constantly seeking to improve. So I think that if I can find a way to really get good at journaling, I'll be better off. So I'm gonna see. I don't know. I keep trying to force this, but I think it'll be all right. But I'll kind of talk about everything that I saw today and what I was looking for, and then what I was expecting, and basically what happened. And I was very lucky. I predicted the overall, move of the day, as I will consider it, which is actually not this move here, but this move here, this down closed, set, and it doesn't get much better than this move right here. Actually, uh, the only thing that would make it better is if we did not have Chop City. I mean, it was so choppy up here, especially on the 1 minute. If you were watching this on the 1 minute, I'm really sorry because you definitely got chopped up. And I placed a trade in here, but I'll go ahead and explain everything around it, and we'll talk about why it was actually a loser. So I I don't know if I'm supposed to share this. I don't know if I'm allowed to. So I don't want to get in any trouble. So just for theory's sake, this is, like all just theoretical, as the disclaimer suggests. This is truly just for education and entertainment. I'm not trying to persuade anybody to invest or anything like that, but I just want to document this for myself. And if anybody chooses to acknowledge this, they can just simply see what it was like for me. That's all. I'm not trying to promote investments of any kind. But I started a funded account for the first time, and today was my first day trading live. Friday, I traded as well. I can't remember. I know I had a winner, but it was super small, and it was like like extreme scalp. It was good, but I also was kind of busy that morning, so I didn't get, you know, to watch the charts as much as I wanted to. So I kind of just took something and ran with it. Which is, what I plan to do today, believe it or not, because as soon as we started chopping like this, I had no idea what the plan was heading into lunch. I mean, for me, it was just going to sit up here and then, run again. Which it sort of did, but it had to take some liquidity first, which is these London lows. But I wanted to just everybody take a second to look at this because this is everything that I had on my chart whenever I logged off, and this all means something to me, and I can tell you what all this means. But we'll go ahead and put the more important stuff on the chart, and then the stuff that I was watching, and the stuff that is most prevalent in the moment. And I'll try to remember everything to the best of my ability. So I'm gonna go ahead and remove these drawings, and my new week opening gap indicator is gone. I'll have to put that back on. I have all these. I need to go clean these out because I don't even. I have not used this, or this like in a minute. So whatever though. Oh, okay. So I said that I have to. I'm sure there's so much I have to do. Yeah. And then I'm just gonna set that to 3 because that's the pertinent new week opening gaps right now. I'm planning to get it back to 1 because it's very rare you see a new week opening gap like this one that we're in. What we were in, but we sort of traded through. But we have really been trading around this thing, like a lot. But essentially, the last move saw us blow through it, so it's expected that we would tap it. Excuse me. However, if we go above consequent encroachment, you can flip to longs, and you can start looking for longs. Alright, now that's everything that everybody needs to know for today. Um, so I log on, and I'm looking, and I'm just like, oh, okay, so, we're at the bottom of this new week opening gap. London highs are sitting right here. We will wick up here, tap this, and then go lower. It never works like that, unfortunately, but that was literally what I was like. I got on, I was like, I'm about to make some money today. And I set myself out a little bit because I didn't want to trade on my first day of having this account. I really didn't want to. And I knew that any other day I would have just put in an entry off of an inversion. But today I was a little bit more strict with my rules. I have like, if the inversion fair value gap setup is A minus, the fair value gap setup with an inversion fair value gap is like an A++, especially if it's in a premium. So that's just a little something something. But today is the setup of the day was actually a silver bullet, which is amazing, and I will basically give you a masterclass on the silver bullet today and talk about my expectations with the funded account and how it impacted my trading in the first day, and then why I had a loser on the day. I lost $50 on the account, which is nothing. I didn't realize, I can start trading with some more contracts than what I ever have. But as soon as I get in, I immediately outline these highs and then this low. Okay, that was immediately what I did. I already have them marked with the indicator, but I always like to mark them and delineate them like this because these really mean something to me. And that's what my eye kind of moves to. So when we're trading here, we're already stuck in the upper half of this range of London. So the fact that we consolidated here shows that this is the draw. Like, in theory, you could have just saw this and then just longed and expected it to hit an opening. Now, you wouldn't want to do that with, like, one contract at the maximum because it's risky. And, but this level was guaranteed going to get hit today. It just was depending on how much you wanted to weather. But checking the news, it's nothing. I'd check the news. The only thing that, like, mildly interested me was the 945. But it's yellow, so it's not even important, like, at all. I would never think about that. I see the words FOMC, and I'm just like, okay, it's about to be volatile, but obviously it's not. But ahead of the open, I'm sitting in the 5-minute, and I watch the 5-minute until this wick is closed, and this candle starts painting upwards. So then I switch back down to the 1-minute, but I should probably not get so ahead of myself right now. Market still hadn't opened yet, and I was looking for some higher time frame draws and liquidity, so I went to the hourly. And then I kind of saw that, okay, new week opening gap right here. We may want to reference this. It just depends, though. We have London lows right here, sitting right, this fair value gap right here. So that was the first thing that I acknowledged. But to be honest with you, there's probably a 4-hour. Yeah, there's a tiny 4-hour right there. So at the exact same levels. Interesting. Really interesting. But yeah, I was going to say, but I acknowledge this and this 4-hour bullish fair value gap, and I was just like, with this fair value gap sitting over top of it, this entire section is just going to be nothing but balanced price ranges. So I'm personally looking for higher prices tomorrow. I'm not concerned with anything else right now because we just closed above this 4-hour fair value gap in the middle of the new week opening gap. But because of the way the contract sizing is and everything, I've really been hesitant to trade the NASDAQ. Okay. And it's just the first day, and I'm stopping that now. But I was trading with about 6 contracts on the E-mini S&P, so I will be stopping that right now, and I will be trading with what is it? I'll do 3 micro NASDAQ contracts, and that's what I'm going to be trading with for now. And then I'll progressively switch over to 1 E-mini S&P, but I'm so used to using these charts that I don't want to mess up my watch list. Just like that. But as soon as it begins, we notice this really, we haven't opened yet. We're somewhere in here, and we're in this 4 hour for value gap. Now, immediately, we're very bullish. We're opening very bullish with this new opening gap, so we're pretty overbought. And, we didn't go into the gap hardly at all. We went to consequent encroachment, and then we ripped higher. Which, is to be honest, what you expect. But this right here as well, kind of giving, I don't know why I'm saying this, but it's kind of giving balanced price range, which I believe I did have written at the time, but I would consider that a BPR as well. So this is really high resistance. I mean, for us to go through this is nuts. But and then the only other thing of note up here is this order block. So on the NASDAQ, that is our key levels that we're looking for right off of RIP. Then now I'm just going to drop and look for some hourly highs. So, no, nothing really apart from where we're at. I don't really expect these to get hit because this for value gap and this like basically order blockish range. So now we're just going to observe some sell side, fair value gap down here, but fair value gap here, resting below, but I'm not really too concerned if I'm being honest. So right now this is all I have outlined. I was not using the daily wicks, so I will, because something was preventing me, but I can't remember what it was. Oh, it was that there's no wicks right here. It's all this new week opening gap, so I just graded the new week opening gap. So I will go ahead and do that now. These are the price levels that I was observing throughout the day. My levels are just a teensy bit off. The upper end of that is just a little bit off. There we go. Okay. That's kind of the plan here. Just with what I'm looking at. And now I'm going to switch over to the S&P. Take a look at it. This is everything that I have up already. I'm just going to remove this, make it a little bit cleaner to see. But essentially, and I'll remove these as well. In the gap, it looks like we're going to hold the gap, tapping into just about the lower end of this, almost going completely through the order block. This is why I was flipping bullish. Right, I was literally flipping bullish, because if we closed above this right here and above this high, oh my gosh, I was longing the shit out of it. And I knew we were going for we would be at all-time highs before too long. Not today, but it would start a pretty strong bullish. So we're at right now. If we get above all this, it's just nothing but money all the way to the top. So we'll see where it goes, but as of right now, this is the E-mini. I'm not going to do a great dive into this because I'm just going to get back to trading NASDAQ. I'll look for the E-mini to confirm, but today the trade was actually on the E-mini. I very rarely say that, but I'm going to keep all this here. It's a little bit less than what was originally on my NASDAQ chart, but yeah, this is actually the okay day to trade the E-mini S&P, but I'll go ahead and show you the execution and explain why I took that trade. Actually, I'll do that in just a minute. But right here, we're in the open, we're head to open, no more liquidity is really observed. We've got this hourly for value gap, but I'm not too interested in it just yet. So I'm going to drop to the 5-minute, we're just observing how we open, and how we're acting in the new week opening gap. So right away, we drive up, we start ticking the bottom, we start ticking this right here, and then we breach through it. So this right here shows a clear run towards consequent encroachment. Take London highs, the nearest quadrant level is consequent encroachment. This is a trade. I'm telling you, you don't have to take this stuff. You shouldn't take this stuff. But if there's a confluence, okay, if there's a fair value gap resting on this, alright, if you drop to a lower time frame and it taps into that fair value gap, if it's a single wick, if you take that high and the original move, expect to go long. Alright, now I was actually expecting this wick to hold and then wait and sell off, because my draw on liquidity is the London lows, and that's no joke. That was what I was expecting was going to happen today. That was going to be the move. Just because this stuff seemed to be stacked up too nice, and with this 4-hour BPR and the new week opening gap, it just was short. It was just short. I was banking on shorts. But I'm a contrarian trader, so of course I'll find a way to look for longs, but this order block up here is just outlined. I was like, there's no way we really go up into there. But of course, as I say that, we just rip higher in the open. 3 insanely strong bullish candles. Wick back down in to a higher time frame for value gap, but you couldn't observe a 15-minute value gap at the open because that is the 15-minute. So we'll drop to the 1 minute and just kind of show you, and future me, what was going on here. But so rip the quadrant, go up, tap back in, just barely to the top, go up, order block, fail to even reach this part of the order block, drive up, then we dig into this, we go up, fall short of the quadrant, consolidate around, drive back up. It's just a mess, really, just a mess. It's still respecting bullish order flow, and I believe I actually took a trade right here in this price leg, and this is why. Alright, it's nasty, it is, but this is why. So going to the 5 minute. Why is it doing this? It's been doing this so much lately. Did I remove the indicator as well? Yeah. I have no idea why it's been doing that. But anyways, the new week opening gap's already graded. But I don't know. Lagging a little bit too, somehow. But right here was this 5 minute for value gap. That was the first presented for value gap of the day, so I was expecting to see a move off of it. Dropping down to the 1 minute. Alright. And then also it's important because I took this on the S&P, so I'll show you my confluence on the S&P. It should already be there, so it shouldn't be hard for us to find. Okay. Where am I even looking? What's going on? It's Thursday of last week. Holy shit. Okay. Alright, so observing. That was also, I outlined the previous one as a bearish value gap, but it's a bullish value gap. 5 minute bullish value gap. We tap into it, we respect it on the E-mini S&P. We wick below it on the NASDAQ. It'll take me too long to scrub over and find it. And it's not showing this execution, which is nice, but it was right here. The second we inverse this gap, or was it? Okay, yep. Alright, I'm back. I'm back, so drive down. So we're up, 5 minute gap. We rebound out of the fair value gap as soon as we inversed this gap right here. This fair value gap, this 3 minute, it's a 3 minute. I went long right here on this candlestick. And get immediate expansion. And I thought it was great. I was just targeting highs, and then I couldn't figure out how to get a stop loss. And I went to put a stop order, and then I was like snugging it up here, and it just pushes me down. Like, it pushed me down. And I was just like, oh shit, we just started selling off like crazy. And I had no idea why. Like, there was no gap up here. This volume imbalance and this little order block was all that I could think. But I was just like, we just tapped into a higher time frame PD rate. Not a super high time frame, it's a 5 minute. But we just tapped into this PD rate, like, and respected it. The bodies, like, literally stayed above consequent encroachment. I thought it was a dime setup. And if you go to NASDAQ, this plays out perfectly. But, I'm going to be more realistic. The S&P was, like, the leading bearish index, which you'll see when you start getting these SMTs. But I'm going to try to wrap this up. Talk a little bit more about the prop. But essentially, we start pinging around in here, and this is the, oh shit, that's about right there. And this is the same, it's not going to have, I'm just going to clear this out, it's not going to have precision anymore, but the new opening gap is very important to the trade, but it doesn't, it's whatever. But essentially, reject out of this gap, we wick below it, which made me think that the S&P was more bullish, so I was like, yeah, hell yeah, this is going to be a banger. Target these highs, second we inverse, there's a 3 minute gap in here, and then it plays out. It even gets a little bit higher. That was the trade. It just was something super simple because we broke the upper range of the higher time frame BPR on this, so I just figured we were long. Like, the other day I saw there was a long retracement at the CPI candlestick, at the 15-minute CPI candlestick. And, it just tapped into it, went long. So I just was like, huge expansion, fair value gap, let's just ride it up. Just take something super simple on the day. Unlucky it was on S&P, but it was only like 3 micro contracts, so $50 I closed just because I got nervous. But it still wouldn't have played out on the S&P, which is upsetting, but it's whatever. I noticed a lot more nervousness before I got into the trade. Like, I was really nervous to push the button because it just starts a new chapter in my life. But I'm happy that I did. And to be honest, once I was in the trade, I would literally was so comfortable. Like, it wasn't an issue. I just saw that I didn't have a stop loss, and I was just like, well, we'll close this one early. I don't care if it plays out. I'm not gonna let myself get caught. And as it started dumping, I was like, okay, well, I'm just gonna wait for it to wick back up really quick, and then I'll just take partials. But I was just like, that is the worst mentality that I could ever have. Just like, if this thing dumps, I'll feel like an idiot because I blew my account. So I'm literally cutting myself off at $50. I was gonna like penny pinch for $30, and I was just like, no, 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 no. I'm not getting caught in this because if it had dumped to 80, I wouldn't have felt bad. Like, I would still feel pretty similar, but I would have just been like, I shouldn't be letting that happen. But that was the trade that I took. Didn't really pan out. Would have panned out on Nasdaq, so I'll be playing the Nasdaq more often and just using that, S&P for confluence. But the next important bit of information is the 10 a.m. silver bullet. So I'm getting a call, and I do not know who this is. 1 second. Alright, I think I'm back. Sorry, I had to take that really quick. But I cannot remember exactly where I was at, but I just know that this is the ICT silver bullet example, and I would just like to talk about it. So initially, we get a bunch of SMTs up here. That's just confirmation. It shows it very well. Here, these highs are all lower than these highs. So essentially, the way the market works is you cannot have repeated liquidity runs. All right, you're going to have 1 to 2 to maybe even 3 liquidity runs, but after that, the market's not just hunting liquidity because you would just go sideways. You get what I'm saying? So you have to think about, you have to get people out of the marketplace and then take the move off before they're encouraged to take another move again. They need to be scared. Okay, hold on. It's calling me back. 1 second. All right. Sorry about that, but that was another little interruption. But now I can discuss this ICT silver bullet setup. Excuse me. Excuse me again. But the ICT silver bullet takes into account, for me, your first draw on liquidity. Excuse me, that wasn't taken. So the conditions that meet the silver bullet that are great is if you have a session low that could have been taken at open and you would have been okay with it. Today is perfect for that. Oh my gosh, this London low down here, if it would have ripped away from this high right here and didn't just reach up and grab it, it would explode up and get it out. I'm telling you. So if it went down through here, inverse these gaps, it would simply just ping down through here, and if it respected this bullish fair value gap, you would see a run that's just insane up through here, and it would continue going as well. But the fact that it left this untouched means that the market is planning to revisit it. I'd say, I can't make any exact estimations, but I would say you're looking at about a 70% chance. You're looking at about a 70% chance. About the same time whenever you reference the opening range gap. Actually, drop it to 65, alright? But 65% in the marketplace is amazing. And that's not a guarantee. That's just, that's for education, But if you're up here and you're seeing this, it's like up, low, up, low. This is telling you what you need to know. You have to have a wick on the top of your candlestick and on the bottom of your candlestick. Not always, but on 4-hour candlesticks, you almost always have wicks. 99% of them are going to. Drive up, form the top of the wick, drive lower, respect this fair value gap, so that's noteworthy. Up, barely get over that. Drop back down below. This right here should already be, it's telling you it's about to sell off. Alright, for the people that were short, because they know that this was just a stab run on liquidity, third run on liquidity, 1, 2, 3, and now you're looking for the sell. So believe it or not, I was about to short this. Now it would have been crazy if I did, but I went to the bathroom. But I will show you. Maybe it's on the S&P, but I was gonna short. There's a 3-minute gap in here somewhere. It might be right here, but I'm not sure. But I was gonna short somewhere, but I was gonna tuck my stop loss up just above the order block, and then short it just because I wanted to capture the daily range, but I just didn't. After I already had that loss, I was a little nervous. But the second I saw these lows taken, I started looking for a retracement, and then didn't quite get it. Started going lower, started going lower, started going lower, started going lower, and then there's a 3-minute gap right here. I put a sell limit right there, walked away from my computer for a little bit, went and sent a couple emails, and then I get back and we're already right here. I didn't hit my sell limit. I'm kind of glad it didn't, because I would have had a little bit of anxiety, but I pretty much knew we were selling off. But it's just all part of the game. But the thing is, with the silver bullet, SMTs, right? So high, 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 and then we're going nowhere. Expansion to the downside, inversing this gap. All right, so if just off of this inverse alone, it's a trade to the sell side. Just take this low. That's it. That's all you gotta do. Top of the fair value gap, even better, But it's pretty obvious it's going down below, but really it's most obvious that it's going right here. And then it just taps it and moves higher. But for the silver bullet, between 10 and 11 a.m., setup appears 10:36. Inversion of this really is 10:38. It's about your last possible trade. Retracement, filling in these inefficiencies, which is weak candles. And then you just see it, just like a little rubber band. This inversion, add. Alright? Inversion of the order block, add. You know what I'm saying? Inversion of this fair value gap, add to this low. Take one contract off at this low. Alright? Or I'm gonna be honest, I take 50% at this low, because this is just amazing expansion. 50% off runner. Alright? Runner all the way down. Hit this first. There's probably a gap here. Second it hits, if it rejects off a consequent encroachment, profits. Alright, up here, you could really add here. I'm just going to be honest, you could. It's so close. But then it consolidates. I'd be honest, I'd probably end up closing somewhere right in here, just because this wick's so large. But anyways, yeah, that's the ICT Silver Bullet. I will now just close with my thoughts about, traded on a funded. So I've only traded with fake money. I've only paper traded. So the eval's not too difficult for me. It's also, $100. It's really nothing compared to what you stand to gain. It's same principle of people buying the lottery, except it's like you buy the lottery and you have if you're good, you have a chance to win. And it's a pretty decent chance. I didn't break my rules or anything today. It was a good setup. I'm not upset at taking it at all. Although it didn't play out, it was very, very close, like a couple of ticks away. And it played out on another index. So no news Monday. It's conditions like that. That's what you're gonna see. This stuff right here, alright, this is bad. To be honest, you should have probably gotten off the charts as soon as we took this high. It's just really as soon as we took this high. As soon as we did this, and then we did this, right here is probably where I should have closed out. But I just watched again, and I got off the charts about right here. I thought about jumping back in on this retracement, this inversion, little market maker sell model. This is the unicorn right here. Really, you can consider that the unicorn off of that, but that's besides the point. But I just wanted to document this to talk about my funded journey, and we'll see where I stand tomorrow. I will be able to watch it open in the morning, and hopefully I go positive. I'm going to be looking for bullish prices. Just because we ran so far, I'll look for just a retracement into a fair value gap, taking a session low. And then look for an inversion coming out of the higher time frame fair value gap, and then I'll just look for 3 micro NASDAQ contracts, ride it up to a high, look to gain about $250 tomorrow. Get $200 in the green, and then I'll start risking a little bit more. but I think the way my risk is going to work, I'm going to risk about 1% of the account, and that's probably about it. I might risk 250%. I don't. $500 is a lot of money, and I'm not quite ready to see numbers like that yet. I'm just going to be honest. I'm not. I'm not ready to take $750 of drawdown and bounce back from it. I'm just not. Now, obviously, I wouldn't be taking that much drawdown because I'm never going to risk more than $500 on this account. But I'm just a realist, and I just wanted to close with that. But overall, I also want to close with, this is just for educational purposes. This is simulated, so it's not real, not expected to be real results. I'm just telling you what I see and what I'm doing for me. Right? It's education. I'm just studying, and current results don't indicate future results. Past results don't indicate future results. So, anyways, just thought I'd show some of that. It's honestly, people can say that today was bad PA, but I think it was honestly pretty decent. You just had to be patient, and I think the market's only going to get to where you have to be more and more patient. Tomorrow, for news-wise, I just want to look and see if I can jog myself, but nothing. 2 a.m. GBP. I don't know if that'll do anything at all, but anyways, today marks the beginning of a new chapter in my life. May not have been a success on my first day, but I wouldn't really consider it a loss either. I'm staying afloat. Tomorrow, my goal will be to not break any of my rules. I'm not stressing it. I will only stress it if I drop to below $1,000 on the account. And then I'll start being pretty selective with my setups. But overall, I'm not going to trade in too much fear. I just know that a lot of people get the eval portions out of the way very quickly because of stuff like this. You'll go stagnant, and the consistency rule is a little troubling because if I had taken a trade like this, it would have been hard to match trades like this consistently. So my scalping style is definitely best for me. The live data is amazing. It's so nice to see my fill pop up where I click it. I did research. I realized how to place stop orders and sell orders now, and like sell limits and all that stuff. And that's it. That's everything I've got for today. Thank all of you for watching. If you guys did watch all the way through, but it's a long one, I know, but it's not a lot to unpack today. It's pretty simple, just a no news Monday. Even if you had winners, you should probably still sit out. I'm not gonna lie to you, because these days will flatline you. Especially if you take stuff like this and expect it to keep going to top of the order block. The problem is that these are good setups, long, and you're not getting anywhere. And then it's also really weird because we're sitting above this BPR and we're just consolidating up there. Consolidating outside of a fair value gap is never good. So, anyways, thank everyone for watching. And in the future, for me, as for myself, keep going, brother, and keep your head up. It's even if we fail this account, which I don't think we're going to, but even if we do, it doesn't define us, and we'll keep pushing forward. So until tomorrow, good luck and good trading.